When you're evaluating a laundromat deal, the number one thing to look for is cash flow. Are you going to be buying a job or are you buying a business? You got to make sure your cash flow is wide enough where you don't have to worry about if interest rates go up or you have to unexpected expenses or repairs, and you're still making money every month. Because if you're not making money every month, what's the point? So I created a spreadsheet just to kind of give you an idea of some of your expenses, and you can add your own expenses, change the numbers, etc. I'm going to be going over that spreadsheet in this video, so it'll give you a rough understanding of how the laundromat expenses work versus income. So let's take a look at the spreadsheet, and again, I'll put the link down below. I'll upload it to my website so you can download it yourself and goof around with your own numbers. But let's check out the spreadsheet and see what we're working with. All right, so here's the worksheet. Let me go over it. So the gross revenue a month for this example laundromat, I put $10,000. But this figure right here you can change this figure to whatever you want. So say if you want to do 8,000, if you're looking at a laundromat that's making 8,000 a month, a little under 100 grand a year, which is like an average laundromat. Your net revenue changes, because we changed that. Your net revenue is now, you're losing $600 a month. And I'm going to show you kind of some of the inputs I have that will affect this. So if you go over to the expenses, percentage of gross, and total, you're going to be able to change each one of these figures to whatever you want. So you can kind of see if this is a good deal, if it's cash flowing. So let me move this down one. First expense is gas bill. I did that 8% of total gross. That is a variable expense, so it does change based on how much money you make. You're going to be more busy, your gas bill is going to go up. So let's change this back to, let's say, laundromat's doing $16,000 a month. Your gas bill is going to go up. I've seen some laundromats, gas, electric, and water be as low as 12%, but 20 to 30% for utilities, is kind of normal. It's not going to be outrageous. So I just did 8% for that. And then let me go down a little bit more. So water bill, I did about 3% of gross. So this will change based on how much gross revenue you're making. And if you notice, once I changed the gross revenue to $16,000, your net revenue up to $4,500, $4,400 a month. So that's good. So water bill, some places water's more expensive. You're gonna have to pay sewer tax, etc. So that's going to change, obviously. So you can edit that to whatever percentage that you want, or you just erase it and do it as a fixed expense. Oops. All right. Electric bill, I did this as 8% as well. It's going to vary. In the summer, here in New York, electric bills skyrocket. And at about a $16,000 gross revenue, our electric bill is between $1,200 and $2,000. Air conditioning, that's the biggest one that takes a lot of of the electric bill. So if we had to average it out, I'd probably say about $800 to $1,000 per month, but that's variable. So that's going to change when this goes up. So if we change this, let's see, if we change this to say 25,000, you make a lot more money. Even though your variable expenses go up, there's a lot of fixed expenses that stay the same. So so the water bill went up, the electric bill went up, gas bill went up. But let's go down again. Insurance, this is going to vary a lot too, but expect between maybe, good idea between $2,000 and $4,000 depending on how big your laundromat is. So this is based on $2,000 divided by 12, $166 a month. You're going to need it for your business, plus you're going to need it if you get an equipment loan. You need to have insurance on the equipment. Oops. All right. Rent expense, if you own the building, you're going to have a mortgage expense. It's going to be a huge difference between each location. But I also added triple net under there, and I did triple net. It's going to be a variable. I believe it is. I got it 20% of your rent expense. So even if you own the property, you're still going to have triple net expenses such as sealing the blacktop, cutting the grass, snow plowing, stuff like that. So if you don't have that, that's obviously going to help your net revenue and cash flow. So let's go to the next one. Labor costs. If you're unattended, you're probably still going to have a cleaner there once or twice a day. This figure, I just did 15% of gross. If you're unattended, if you're fully attended, it's going to change a lot. And it's definitely should be part of your plan going into a laundromat. But yeah, I have 15% of gross. So all right, now we go on to repairs. Repairs it at 3% of total. If I was planning out for a rental property, I'd probably do 5% of gross rents. But if you got newer stuff, it's going to be cheaper for repairs, or pretty much could be zero if you have a warranty. But then that goes down to machine payment. If you have old machines, your repairs are going to go up, and your machine payment is going to go down to zero probably. But your machine payment is going to obviously vary depending on how old your machines are. If you got a machine payment at all, how many machines you have, what your interest rate is. My interest rate for one of my loans was like 4% for years, and now it's at 10.5%. So my payment's gone way up. You got to make sure you have enough spread to cover, stuff like that. If your rent's going to go up based on, increases that are planned out years in advance, but stuff like interest rates can change in 1 month. It can go up multiple times in 1 month, so you got to make sure you have enough room for that. And then I think I just have, internet expense. So, all right, take that off. So I just have internet. I got a huge list, a lot of room down here for more expenses. If you have other expenses I don't have on here. But here's your total expenses, here's your gross revenue a month, and here's your net revenue. So, if your average laundromat makes, let's go back to the 10,000. Based on these figures, you're making $600 a month. If you're paying any money for this laundromat, it's not going to be a good return on investment. If you're buying the building, and you're just going to be operating the store as part of a store in your strip mall, maybe it's worth it. Because you won't be paying rent to yourself, so you can add the extra rent. Subtract $2,400 if your rent would be zero. But every deal is going to be a little bit different. Like I said, I'm going to have this tool, this Excel spreadsheet on my website. If you want to download it and goof around with it yourself, always make sure you analyze the deals. Don't just get into the laundromat business because you want to get into it. Make sure you have a good deal, because you want to be in there and making money, not losing your money and another sob story or something like that where you're not making money. Any deal you go into, even if it's real estate, make sure you do your due diligence and get that cash flow. So hope this helped, guys. If you have any questions or if I missed something, put it down in the comments, and I can add it to version 2 if I ever have to update this as well. So thanks for watching, guys.